Hey guys, I know you loan originators. Some of you are very experienced, some of you are not. One of the reasons why I want to show you breaking down a pre-qualification letter is so you can hang on to your realtors. There's nothing worse than giving your realtor a pre-qualification letter but not all the information built in around it for that realtor And the reason why I'm explaining it to you, when a realtor is showing houses, if you give them a pre-qualification letter for your borrower at, let's call it $180,000. Let's use $170,000. Okay, we're going to use a $170,000 pre-qualification letter. That's their purchase because you may have verified their assets. We're going to get into their assets and the type of loan. What type of loan is that borrower qualified for? Are they qualified for FHA? Okay, so we want to talk about that pre-qualification letter. What type of loan you want that realtor to know what type of loan that person is qualified for. You know you have to get all those addendums, the VA addendums, the FHA addendums. You need that seller sign it. Nothing like getting that stuff out with the pre-qualification letter. Make your realtor look like an ace. They're going to love you and they're going to stick to you. They're going to have confidence in you and want to come back. This is about how to keep your realtors and how to break down that pre-qualification for you. And the reason being, we're going to talk about some things. You know what goes into it. You understand the front end DTI. You understand principal and interest, mortgage insurance, PMI, MI, all that, whatever you want to call it. Property taxes, homeowners insurance, homeowners association and condo fees, flood insurance. You understand all that's in the front end DTI. The realtors, not all realtors, especially the real beginning realtors, do not understand that. So you're going to help break it down. The more you educate your realtors, the more they're going to love you and trust you, because it's going to show that you know what you're doing. It's going to help you win over that realtor and keep that realtor. Remember, if you get 10 realtors giving you one loan a month, you will be a very successful loan originator. So that's your goal. So let's look at how we're going to break this down and explain it to them. You want to make sure that you verified on a pre-qualification letter that you have verified that your borrower does have the assets to put down. So in this case, let's say they have $20,000 to put down. It does, for FHA, that's definitely more than a 3.5% minimum, but you know the difference in the MI and what that price is going to be for MI. We're going to get to that. So let's do a loan amount of $150,000, okay? And let's use an interest rate for our example at 5%. You know that's going to break down on a person's credit score, to debt to income, loan ratio, loan to value, all that stuff. But we're just going to use it as an example to show you how to break this down for your realtors. Now, and the reason why this is important, and important to see what calculations that you're projecting is going to work for that borrower, okay? Because when a realtor shows them a house, they're just saying, I got a pre-qualification letter for $170,000. I'm going to show them all the houses at $170,000 or less. But if they go out and show two different houses at $170,000, okay, and you have one house with a hip roof and one house with gable ends, the homeowner's insurance, especially if they have hazard of wind, if they have wind insurance, if they're in a wind velocity zone or they're in an earthquake zone, they're going to have that additional coverage. The impact, the structure of that house is going to change that amount. So that's going to impact your purchasing power up here. Also, there's nothing worse than or the house is house A is built in 1970 and house B is built in 2008. Well, the hazard insurance is going to be a big difference in cost, because that older home is going to be at more risk of chances of fire, break-in, stuff like that. So that's going to be a different hazard. So those homes usually cost $300-400 more a year than those others. So that's going to have an impact on your loan amount. So we want to look at those things. So we want to be able to show the realtor what you're carrying. You can give them a sample, and you can bulk it up and saying, hey, the combination I carried for homeowners insurance and taxes, I carried $300 in that pre-qualification. And you can cheat and say, hey, we're doing a purchase price of $170, a loan amount of this. I verified the down payment of $20,000. I'm using an approval. I got them approved at 5%. You want to make that an 1/8 of a percent or 1/4% higher than they're actually that you could actually lock it in at. And you tell your realtor and borrower that you're just putting that as a qualifying rate as a buffer, okay? Because in the meantime, if they're searching for a house, it takes them 2 or 3 weeks, rates pop up and you qualified them at 4 3/4, now that pre-qualification is no good. Because now it's going to set them up too high. So always quote high, but tell people that you're quoting them high to make sure they don't buy too much house and that they can still go through it, especially if they pay for a home inspection, they pay for an appraisal, they pay for a survey, then you go to lock in that loan. They've already got $1,500 to almost $2,000 into this house. You can't lock in their loan to make it qualified. They're going to buy down it. They won't have enough deposit. They won't have enough down payment money. Whatever the reason is, you don't want to ruin that deal. You don't want to be the cause of that realtor losing that deal because they're going to be mad at you. Remember, realtors blame you for everything. If the borrower goes out and screws up their credit and doesn't miss a credit card payment, it's your fault, right? So you guys know the drill on that. So generally what I do is I'll give them the price, I'll tell them what the loan amount, the type of loan, I verified their assets, and then I give them a maximum front end. I might give them, say $1,400 is their maximum front end. I tell them, I show them my website. If you got a website, you got your own website, have a mortgage calculator on it. You don't want them going elsewhere to look at a mortgage calculator, because if you go online and hit mortgagecalculator.org or whatever, you're going to see all these other lenders. So you don't want that realtor, you don't want that borrower using an online calculator. Send them the link to your mortgage calculator so they stay on your site, they stay with you. That's what you want to do. Give them that, allow them to play with it, tell them what you can do, but give them the maximum front end DTI and they can plug and play all their stuff. Give them the maximum DTI, give them this. In this case, it'd be $105. Give them that. If you got mortgage insurance going in there, if it's 0.0085, give them that factor for FHA. Okay, so if they find a different house and they still want to do it and they want to drop that loan amount, they can still factor that in. Or if they can plan on getting a gift from a family, they can bump up the purchase price if they change the loan amount. Whatever they need to do, if they have these factors from you and they have this number here, they can plug and play all that for them, and that can help that realtor, and it'll save you a bunch of phone calls getting from the realtor on a Saturday night, Sunday night when you're having dinner with your family and saying, can you give me a new pre-qualification letter? We're looking at a different house and the taxes of this, does it still work for them? If you give them this, you can tell them if they're over or under, if they're going to stay qualified or not. I hope you understand that. I hope it helps you. I hope you make you a successful loan originator. Have a good day.